Ford Motor Company, the F. All right. So this is another one of the top 10 most popular stocks that's trending right now. And this is another one that took a dive and people are looking to get in at a low price. So let's see what's going on here. This is Brian Lewis with MMT Investing, and things just changed. So what we get here is our ABC wave down on the S&P, and then we get a 1, 2, 3, 4, 5 Elliott wave up, and then we've got a reversal off of there now on the S&P. And Ford took a dive here from about $8 to about $4, and this looks similar to the airlines and similar to kind of the oil stocks, some of them that just took a huge dive on this down leg and then didn't recover very well. And you still get the 1, 2, 3, 4, 5 pattern, and then the reversal, and you get this kind of wedge, kind of shape with the breakout pattern to the downside, which looks like a bear flag. And what we're seeing in the large cyclical pattern here is that Ford is smashing that like button right now to help me out with the YouTube algorithm. So in the cyclical model, what we're seeing is we got about a 3 to 4 month kind of cycle window. Looks like it's going out into June. And we're about halfway, a little over halfway through with that cycle. And this is a credit contraction cycle. It's a down cycle in a bear market. And what we're seeing is a down and then a bounce and then kind of a bounce that should be going out into June. And then when we get the reversal into the next cycle, it should be a credit expansion up phase. So I guess this is a good video to kind of mention Tesla and mention Ford and take a look at these auto companies and what's going on with them, because the gasoline vehicles have been way more profitable than the electric vehicles forever, and that's not really changing very much. But these older car companies, these bigger car companies like Ford, they just have a huge amount of debt, and Ford is one that already has gotten the bailout loan during the first crash, and so now Ford is on life support and they're not allowed to do buybacks on these loans now. The government is coming out and saying if you're getting bailout loans, you can't do buybacks anymore. So I guess, is this a low price? I mean, this is not investment advice on this channel, but this doesn't look like the end of the down cycle. This looks like about halfway in the down cycle. So this does not look like a low price to me, and this doesn't look like a good technical indicator. And yeah, I don't think Ford or the airlines right now are good business models long term, like fundamentally. And the cyclical model, it looks like we're just kind of starting a downward move, and that should pull all the stocks down, not just this one. So I don't know that this price is really a low valuation point to get in from a value investing perspective. And then also, if you're going to do value investments, you really need to do fundamentals on value investments and see the long term adjusted kind of prices. You need an inflation adjusted kind of bottom price to find somewhere to buy into a value investment. I mean, this kind of trading around the top of a bubble is not a value investment concept. It has nothing to do with value investing. So what people are doing now is just kind of hypey, swing trading things. And people are saying if you buy stuff, it'll just go up forever. And this top of the bubble and reversal off the top of the bubble is saying otherwise. So that's why you see value investors like Warren Buffett stockpiling cash and getting out of these type of stocks, like the airline stocks that Warren Buffett just got out of. because the value investing fundamentals look really bad right now. So that's just kind of a look from the technicals and the cyclicals and the fundamentals on Ford and the government situation with, is the Fed going to pump this stock up now because they have a bailout? Like, that's not really how the bailout loans are working, and that's not what was pumping these stocks up in the first place. So the way that the Fed was pumping up the stock market was not directly pumping the market. They are providing liquidity to companies. Companies were using that money to do buybacks at high valuations, which is not when you should be doing stock buybacks. You're supposed to do stock buybacks when your company is at good value, not when it's overpriced. But now when the Fed is giving these bailout loans, they're not giving the companies giant wads of cash to play around with. Like, that loan is money that they can use to keep their debt serviced so they don't go bankrupt right now. It's not money to like pump the company up, and they're not allowed to use it for stock buybacks because stock buybacks have become a dirty word now politically. So the idea of the Fed pumping these kind of stocks right now and investing because the Fed's going to pump them up, it's not working that way. That's not how it works right now. The Fed pumping stocks up was what was happening during the bull market when people could do stock buybacks, and now the companies that are crashing are not able to do stock buybacks fundamentally, or just with the balance sheets they're not allowed to do stock buybacks, but also specifically with the bailout loan they're legally not allowed to do them anymore, or they're soon not going to be able to do them. I don't know if that law is passed yet, but they're passing it now. So I think F for Ford is probably the right grade to put on this thing for the time being, until we get down here kind of to this area where we get into a monetary expansion, and we could have another look at Ford. But I don't know if Ford's going to be that exciting there. It might be. That might be a good one that's low coming into the reversal. So all right, that's another top 10 stock that's hypey right now. And just the cyclicals and the fundamentals, just I don't like it. I don't like it. Warren Buffett doesn't like it. The value people don't like it. Cyclical people don't like it. And you can check out the technical analysis channels. They give you a mixed bag of things. And I guess the Elliott wave is a good thing to point out too, because we get that ABC wave down too, but that's part of a larger wave where you get an A, B, C wave. And this should be a C wave down on the larger time scale now after this 5 wave. The 5 wave was really a B on the larger time scale, so that's the look at Ford. I didn't check out their balance sheet. It's bad. They got a bailout already, so I'll do another balance sheet on the next one. But but Ford, yeah, Ford is something. And I guess also, well, hit the like button, please help me out. And that's not investment advice, but I just wanted to mention Ford is, you know, mostly gasoline vehicles, and they're trading at $4, $5. And Tesla is electric vehicles, which is way less profitable. And Tesla's at like $700 a share. So that's a really weird look at what's going on in the auto industry right now. So that's why people are shorting Tesla. I don't know if people are shorting Ford right now. I mean, it's low. It's low to where a short doesn't look that appealing, but just the spot that we are this week just doesn't look like a good time for me to go long. So I'm not trying to buy Ford right now. And all right, happy trading.